Good morning. Welcome to the Stock Market Jobber, and smash that like and subscribe, would you? Good morning. I'll get that eventually, folks. Promise. This is B2B. That's Mark. We're going to guide you through the market this morning. Good morning, Mark.
Hey, how's it going?
Wonderful.
All right, yeah. So we got the CPI coming up. I don't think anything much is going to happen till then. Looks like your boy Dr. Fauci's got some troubles.
Oh, I cannot wait for Dr. Fauci to take it to the jailhouse. That bitch needs to go to prison. He needs to go to prison so deep.
You know, here's what I don't get, dude. If you're 80 or 85 years old or whatever old the guy is, and you're probably very wealthy, like, why don't you just retire and do something else?
Please.
I mean,
disgusting. Well, he has retired from government policy. Now they're just running him around on talk shows, making him look like he's something special. I don't know. It might be in his contract with Satan.
Remember when they were wearing 2 masks?
Yeah.
And now, Oxford University came out with this big study that says the masks had no, whatever.
That was my fault, Sean. Sorry.
Does something go out now?
No, I didn't send the notification out this morning or last night, so it didn't notify anybody we were live this morning.
Oh, all right.
Sorry about that.
And we probably won't get that many people, but yeah, it's like Spinal Tap when the amp goes to 11, and it's like he's like, why don't you just make 10 louder? And it's like it goes to 11. It's like, why don't you just make one mask thicker? Why do you got to wear 2 masks? I mean, it's just such stupidity. Yeah.
COVID broke people, Mark. COVID broke a lot of people. And the more that the longer we've gotten away from it now, there's really some people here that are messed up now because of what happened during COVID and the way that they were locked down and where they were left to their own thoughts and devices. We've got problems.
My brother had a coworker that died from it.
Yeah.
And that's like, I don't think that Robert Kennedy Jr. is that crazy when he comes out and says that. Remember, he said like it was targeted, so like it wouldn't affect Chinese people that much or whatever. I think that the reason, and I'm not a doctor, nor do I pretend to be one, but it just seems to me very odd how some people could get it and die, and other people can get it and not even know that they had it. So I think somehow, in some way, it's structured to attack people that have certain DNA. I mean, I had it and I felt lousy for maybe an hour, and that was it. My wife had it and didn't even know it. So I just think it's just very odd. There's just a lot of questions around it.
Well, you have to think that most of our DNA is tested in China, and then it's sent to China, tested for 23andMe and the others that do the DNA testing, and then it's sent back to us with your results. So they know every strand of DNA that they need to. And if you're seriously wanting to take down a country, what's the easiest way to do it? You start killing us from the inside. It's just like they did with the remember the little aqua dots. Like, I don't know, it's about 20 years ago. They found MDMA in the aqua dots, these little blue little things. The kids were eating them, and they had ecstasy in the damn things. I mean, come on, it's shipped from China. It's a kid's toy. So I mean, that kind of stuff has been happening for a long time. And the problem is that we have a lot of leaders in our country that belong to China, And we need to really have a rectifying election in this country. We need to clean house, get rid of a lot of these bums.
Well, it's not going to happen, so don't hold your breath.
I'm not.
All right, let's see what's going on here. All right, so I don't think much is going to happen ahead of the CPI number. The market is, well, actually, let's look at oil first here. Crude oil futures. Because, yeah, oil is it's down a teeny bit, but it's still trending higher. Even though we're down a little bit, we're still higher than yesterday's open.
Mm-hmm.
So that's going to be good for the energy sector. All right, let's go through the sectors here real quick. I got to go cut my grass this morning when we're done because we're supposed to have some really bad rain, some bad storms this afternoon. So got to get that done. I didn't think my yard was big until I started cutting my own grass. Now I think it's like huge.
Yeah, no, it sucks.
All right, so here's the S&P, up a little bit, but still lower than yesterday's close. When we look at trends, right, we got to look at where we are compared to where we were. You can have a up day, but still be in a downtrend. Like, for example, 2 days ago, you're in Texas. Oh, that's right. I knew that.
Where are you at in Texas, Sean, if you don't mind us asking?
I can see myself ending up in Texas at some point.
Yeah, I like Texas, man.
It's got everything, you know. It's got like deserts. It's got like forests.
Low lying eastern, like piney woods too, man. Like I'm from Dallas, Fort Worth, going through there quite a bit. It's a beautiful area.
Sean, I will have you know I am obsessed with Walker, Texas Ranger. It's my new favorite show.
Dude, he is obsessed. He's named a guinea pig after Walker. What is his name, Mark?
Walker, Texas Rodent.
Walker, Texas Rodent.
Yeah, he's cool. We just adopted him a few weeks ago. But anyway, when you're looking at these trends, you got to kind of look to where you are versus where you had been. You can have an up day and still be in a down trend. Like, for example, 2 days ago. So what's today? Thursday. So Tuesday was an up day, right? See this day here? Let me make this a little bit bigger. So this was an up day, but notice how, so this is the opening price. This is the closing price. If you were to put on, the TV or whatever, they would be like, oh, the market's up like this amount. But notice how this closing price is still lower than this closing price and this opening price. So there are trends within trends, and that's kind of the fractal nature of the markets. It all depends on what time frame you're trading. You got long-term trends, you got short-term trends, you got intermediate trends, but the markets are always trending. They're always going up, down, or sideways. All right, let's see, XLK. All right, so this is up a little bit. I think that the market is kind of poised to potentially make a big move lower. If this CPI number comes in, and I don't even know what the estimates are, but if it comes in higher than estimated, there is a good chance that makes the market move lower. So I'm just trying to see if we could find.
Microsoft is up to we're showing 325.10 this morning. So it's up like $2.50, $2.87.
Yeah, shoot. I don't know what the estimates are.
And Apple's only up 80 cents.
Yeah, well, that's kind of what we were saying, right? If the tech sector gets down to around here, this 167 level, there's a good chance that it gets some kind of a bounce. And this blue line here is, and we shouldn't try to be that precise. We're talking about a $167 security, and we don't want to get it within cents, because I've seen a lot of people miss out on a lot of big profits because they got too cute, trying to just get too precise of a price. So anyway, we talked about how if we got down to around here, we would bounce. Yesterday's low trade was 167.54. So we got to within 25 cents of this important price level. And this morning, we're bouncing off of it. Nothing huge, but we got our resistance here, and resistance turns into support. You can see up here, resistance here turned into support here. So you got your people who sold here, and then we got our seller's remorse when the price goes higher. A lot of these people say, damn, I made a mistake. I'm going to buy my shares back, but I'm only going to do so if I get them for the same price I sold them at. So resistance can turn into support. So we got down to this support level, and now we're bouncing. Now, you could say it's because of this, you could say it's because of that, but as a trader, to me, I look at things in a technical way. I don't think like, oh, XLK is up because, Joe Blow at some firm said the CPI is going to be less than estimated. I just think that if I was on a desert island and I didn't have access to the news, but I had access to my charts, my analysis really would be not that different. I really only look at the news because I know people want to hear about important things, and I look for things that could influence some trading or give us a little bit of a trading idea. But anyway, so we got down. We were within 25 cents of this, and now we're having a little bit of a bounce. So completely net normal or natural or whatever you want to call it. Not surprising. So that's what the important thing to look at. And then we got to look at our healthcare sector. My wife's not feeling well. She thinks that she's got COVID again. Actually,
we had it a couple months ago. My daughter came back from a trip. I think she went to, where'd she go? She went to Copenhagen and came back with it.
Yeah, so it's still out there, I guess. Eventually, there's going to be something that goes around that's even worse. It's just a matter of time. Back in the early 70s, my mother was telling me about this. There was the Wuhan flu went around, and I think it killed 300,000 people. So
Yeah.
I'm not sure how many people COVID killed in the United States here, but in the early 70s, I don't know if I had to guess what was our population. I don't know. What is it now? 320 million?
I think it was like 350.
350?
Yeah.
So maybe back then it was, I don't know, 250, 275, and 300,000 people died from the Wuhan flu. So, this is not, it's not unprecedented to have something like this happen. Of course, there was the big flu back in the 19 teens.
1918 was the Spanish flu, or 1921 was the Spanish flu. This is basically the Wuhan flu 2.0.
Yeah, and they don't know how that started, but they think it started because they were burning garbage and animal waste and stuff, and some of the soldiers got affected. But I don't think anyone really knows exactly what happened. But you could look at pictures from back then. As a matter of fact, there's a book on it. Oh, there we go. The Great Influenza. And if you look at pictures from back then, people were wearing masks just like they do now. And if you look at like people that were wealthy, they had really nice masks. To use VWAP or just hi Di, hey Brandy, hey Matt. I don't really look at the VWAP, but my main indicators that I look at are the RSI and Bollinger Bands in terms of our momentum indicators. But I focus on price levels, price trends, and momentum. So the levels are support and resistance levels, right? The momentum is measured by what I look at is the RSI or the Bollinger Bands, but that doesn't mean that they're the best things to use. They're just something I've picked up out of force of habit, I guess. Let me actually put those on the chart here.
I love the Fisher transform, man. That thing is just amazing to me. If you use it.
Yeah, no, that's a good I don't know if you would call that an indicator though. Technically, it's just a play on words, but
yeah.
But we can look at that. So let me just put this up here. These are what they call oscillators or indicators, momentum indicators. And for some reason, TradingView really likes the color purple. They seem to make a lot of things purple. All right. Now, let's talk about what momentum is, right? Momentum is a measurement of how far something has moved from time period A to time period B. If something is at 20 and then it goes up and down and up and down, and 2 weeks later it's at 20 again, and we're measuring that 2 week period, it's going to show that there's neutral momentum. It's like How far has something moved from time period A to time period B? That's what this measures here, this RSI indicator. So if something gets aggressively bought and gets above what would be its typical or normal trading range, we call that overbought. And if it gets aggressively sold and gets below the trading range, then we call that oversold. And this is important because it draws buyers or sellers into the market because they're going to be expecting a reversion. If something is oversold, well, a reversion would mean to move higher. There's a lot of indicators, or I'm sorry, a lot of strategies on Wall Street are based on this concept of reversion to the mean. Now, if we look at this, if the blue line gets above the red line, we consider that overbought. So look at where this happened, right here, right before we started to sell off. Now we get oversold, right? And it was a good time to buy. Get back up here, we get overbought. Overbought markets that hit resistance tend to sell off. So that's exactly what happened here. Now, if you look at these indicators here, this is Trading View. You got all these indicators here. Now, probably 90% of these are different ways to measure momentum. Okay. And I see a lot of newer traders, they'll have like all these different things on their screen. And I think it's kind of silly because they're just different ways of measuring the same thing. Like this stochastics is popular. So I'll put that up there. And it's not that one is better than the other. You just have to do what fits your eye, right? So look at this. These are three popular indicators: RSI, stochastics, and what we call the commodity channel index, I believe. And you can see they're kind of similar, right? Like, we get up here and this shows overbought. We get up here, overbought. We get up here. It's not that like one is better than the other. What I think you should do is just pick like maybe 2 or 3 or maybe 4 and just get really comfortable with them and learn about the different nuances of them. And when I say a nuance, like what's an example of that? Well, RSI measures in the default setting here where we are now versus where we were 14 time periods ago. So you could start out at point A, get a really big sell off, and then come back really hard and be really overbought. But if after 14 time periods you just get back to where you started, it's going to show neutral momentum, even though the thing is overbought. So that's what I mean about understanding the nuances. Like nothing is perfect.
Well, and if you'll notice on here on the at 136, when the stock shot outside the Bollinger Band, it immediately corrected and came back inside the Bollinger Band. That's another thing is you watch for where the stock moves outside the Bollinger Band, and it automatically it corrects.
It's just a different way. It's a different way of measuring momentum. These are the Bollinger Bands, the RSI, the stochastics. These are all different ways of measuring the same thing. So you got to pick what you like and just get really comfortable with it. I mean, I use RSI, and back when I was a trader in the institutional world, I mean, this was my screen. I had RSI and I had Bollinger Bands on it. You don't need to overthink it, but a lot of people, they have all these indicators or whatever. Now you have to understand too that when we talk about trading models and trading strategies, you got what I call your tools and you got what I call your rules. So the tool is the RSI. What is the rule? Well, the rule is your strategy. All right, here's my rule. If the RSI gets below the red line and it looks oversold, that's my setup. When the blue line gets back above the red line, that's where I have my trigger and that's where I buy. So that would be a rule. The rule is, all right, if RSI gets out of the range and then gets back within the range, well, then once it gets back within the range, that's when I act. That's my trigger. So we got rules and we got tools, and a trading strategy or a trading model is really just a set of rules. It's a set of parameters and a set of rules. You could have something like, let me just make this a little bit easier to see here.
The whole key is to sticking to your rules, though.
Yeah, you could have a 2-parameter model. All right, if RSI gets below the lower red line at the same time as we're oversold on the Bollinger Bands, well, that's my setup. So now I'm using 2 parameters. What could be your trigger? All right, well, if we close back within the Bollinger Bands, for example, that could be one. Or same thing, you could have, all right, if both of these things show oversold, when the RSI gets back above the red line, that's our trigger. So we have to understand there are rules and there are tools. Like you could have all these different indicators on your screen, but if you don't have a set strategy or set parameters, for how to use them, well, then then that's just going to make you confused. A lot of newer traders, they throw all these things on their screen because they think that somehow they're going to come to these, these epiphanies, and it's like, oh, here's something that always works, and of course there's nothing that always works. So anyway, keep it simple. Doesn't need to be that complicated. I'm going to just kind of make this a little bit easier to read here. And now let's look at this, right? This is measuring 14 time periods. This is measuring 14 days. If we go to a 1-day chart, you get the same thing, but now we're measuring time periods of 14 minutes. How far has something moved in the last 14 minutes? And if we get above the red line, it's overbought. We get below, we're oversold. So it's like the fractal nature of charting, right? We're looking at the same thing, the same patterns, but just in a different time frame. Well, that's a good question there, Di, because all of these indicators come with default settings. And sometimes the default settings are really good, and sometimes they aren't. You can just go up here, and the Bollinger Band defaults are, the red lines are 2 standard deviations above and below the 20-day moving average. Now, you could change this. Sometimes maybe you could use the 30-day moving average. Maybe for whatever stock you're trading or whatever market you're trading, a 30-day period is a little bit better. Maybe instead of having 2 standard deviations, you go to 1.9 standard deviations, for example. So this is what we call optimizing. If you trade a set of, just a finite set of stocks or whatever, securities, you can go through each one and kind of figure out what's the best thing to use, because every stock has, or every, I say stock, but when I say stock, I mean, I could be referring to anything, a cryptocurrency. Stocks are just kind of my default, but every stock has a different personality because different groups of people trade it. Like, certain stocks don't really move around that much. Certain stocks move a lot. Maybe the people like biotech, people that trade biotech tend to be very aggressive. So biotech stocks really, really move a lot. Another stock might be, all right, if we go down here and we look at the default settings here, we got 14 time periods, right? So maybe 10 time periods would be better for whatever you're trading, or maybe 20 would be better for whatever you're trading. You can move around these default settings. These indicators all come with default settings, but you can move them. Now, like if we look over here, the default setting for RSI is if the RSI gets above this red line, that's overbought. This is 70. I don't exactly know how this is calculated, but some stocks, maybe they're overbought when this RSI gets to 65. Maybe another stock isn't really overbought until it gets to 75. I wish I could think of some off the top of my head here. Let's see. I think Tesla might be a good example. So let's look at Tesla. Yeah. Now look at Tesla. Like, to me, it looks like Tesla is not overbought when RSI shows 70. It looks to me like Tesla gets overbought maybe when the RSI gets to around 75. So this is something here where you might want to mess with the default settings.
Mark, Etsy gets around 80 and 20.
What's that?
Etsy, or excuse me, Shopify, sorry. It's got a giant gap too.
Yeah, so it's perfectly fine to play around with, and people should do it. I think a lot of people don't even realize it, that you can do this, but believe me, firms spend a lot of money on optimizing these things, and I don't think that there's any proof that hiring some NASA scientist and paying them $1 million a year to kind of do some quantitative stuff or whatever doesn't really there's no proof that that's really like better than anything else. Like, for example, look at this. Like, look at Shopify. It looks to me as though Shopify gets oversold when we get to about 35. So again, the default setting is 30. Let's move this up to let's see, style. So let's move this up to 35. See, now we're going to get more signals. So it looks to me like for this particular stock, maybe around 35 is oversold. And yeah, there's a big gap here. So let me get this off of here. But I got all these arrows and everything on here. Let me just remove.
You haven't looked at this one in a while either.
Yeah. So, all right. So we got support, and we're right above a gap, which is interesting. So if this goes lower, if this breaks the support, there's a good chance that this thing moves down. Not that much, a couple points. But if you're an options trader, a couple points is a nice move. Why do gaps refill? Right? Like, just think about it. One of the main reasons why we have support is because we have remorseful sellers trying to buy things back. When you have a gap like this, where we go through these levels where we never traded, no one could have sold because we never traded there. So if we get back within this range and sellers come in, well, they're going to have a hard time finding buyers. There's not going to be as many buyers within these price levels as there typically would be. So let's see. So this support is around 54, and then this gap goes down to about 49. So actually, yeah. So that's a pretty nice move.
$5 is a lot of money.
Yeah. All right, let's go back. I just want to check out these sectors before we get to CPI. Comes out in 4 minutes. All right, so here we got our financials. Had a pretty decent move lower yesterday, up a little bit this morning. I'd probably be looking at this short-term support here. Let's see, this is about 34. It's up 40 basis points, but it's only 14 cents. So we're pretty much right where we were yesterday. The energy sector should be going higher again because of what's going on with oil. Yeah. So we talked about this, whether it's a breakout. It looks to me like it is going to be a breakout because we had a big move up yesterday. And in the pre-market here, we have another move higher. So there's no profit taking. So it shows us that there's still more buyers interested in this than there are sellers. So that's kind of an interesting thing. But let's wait for another 3 minutes. All right, let's see what's in the headlines here. Flying cars are nearly here. Jeez, that would be pretty cool to have a flying car.
Man, are you kidding me? That I-4 drive that I have to do from here to Tampa, I'd take a flying car all day.
Yeah, but there would be so many flying cars flying around. They'd be crashing into each other.
But then you could drive on the street again.
Yeah, that's a good point. Did you know that when cars first came out, there was gas-powered cars, electric-powered cars, and steam-powered cars? I'm not exactly sure why gas power ended up taking over. Probably because, I don't know, someone paid someone off, right?
Standard Oil?
Standard Oil actually, John Rockefeller was the richest man in the world before cars were even invented. They sold that oil for lighting. People would put it in their lamps. Mm-hmm. Before oil was discovered, people used whale oil for lamps. So the whaling industry was really big, especially up here in New England, right? We have New London, New Bedford, where there was all these whaling ships, and that's what they were after. They were after the oil for the lamps. So then, when oil was discovered out in Pennsylvania, I think, eventually people realized it was a better thing to use for lighting than whale oil, and that's put the whaling industry out of business. But that's where John Rockefeller became the richest man in the world. It was like decades before cars even came around. But then when cars came around and they figured out, all right, well, we could turn oil into gas. I think at that point, Rockefeller's son was in charge. But yeah, it's pretty interesting. It's pretty interesting, the whole oil thing. Think about that. It's like how much smoke and soot must have come out of them. All right, let's see. Ukraine, Oh, look at that. Ecuadorian presidential candidate assassinated.
Holy
I am not
cow.
afraid, he had said about threats he received after calling out gangs and graft in a country. Wow, that's crazy. You know, down. This whole thing with the January 6th thing. It's to me, it's really just amazing that they don't have more security around Congress here. Because if a bunch of yahoos could get into the Capitol, well, what about an Al Qaeda death squad? And um, Pablo Escobar had the entire Supreme Court of Colombia assassinated. So I don't understand it. That stuff should be locked down more.
So
Mrs. Heather,
spies up.
what? I don't see Heather.
Spies up. So it must have been good numbers.
Let's see here. Yeah, well, they did let it, didn't it? Wasn't the cops let the people in? All right, let's see here. I guess the number hasn't hit the tape yet, but we can always look at the market and kind of maybe see.
Trump did it.
Yeah, we're up. Not huge. Yeah, so the CPI must be a little bit less than estimated, and I don't know why it's not showing up here yet. I guess things are behind the times here, but it's not a huge move. 4.7 versus 4.8. All right, so it's slightly better than estimated, but you know what? That's still pretty high, man. 4.7% is still pretty high. Inflation in and of itself is not a bad thing. We want to have inflation because it's a sign of a growing economy.
Right.
But it should be around 2%. That's what the government targets, is 2%. As the economy expands, we get inflation. So that's the reason why, the house my grandmother bought 50 some odd years ago for $60,000 is now worth like $2 million. I mean, of course, there's a couple other things going on there, but we want to have inflation. But when you have inflation that's above the target, like it is now, that's when you have problems. And think about it. The target is 2%, and we're coming in at 4.7%. I mean, that's still pretty high, even though it's better than estimated. Oh, wait, this is 3.2%. Inflation gauge rose 3.2%. Oh, there we go. I'm sorry. I read it wrong. 3.2 versus 3.3. Yeah. So, it's still high. I mean, if you think about it, that's still 50% above where people want it to be, or where we think it should be. So, all right, now we got a decent move higher, but let's not get carried away because it's just really putting us kind of back to where we were at the beginning of yesterday. All right, let me look at a couple things here. I'm not feeling well either, man. Maybe I got COVID again too.
Maybe it might be what your breathing issues are, Mark.
What's that?
Might be what your breathing issues are.
Yeah, man. I felt better yesterday. I've been I was so winded at karate, and my blood pressure is high, and because my stupid doctor didn't refill my subscription or prescription, so I went down to CVS and I kind of made them give me some, and I feel better, but I don't know, dude. I don't know. It's like all of a sudden over the last month or so, I'm just getting really winded, and I don't know. My wife's like, you need to go to a doctor and you need to get a full physical and all that stuff, and she's right. I do. So I'm gonna go to a new doctor.
You're well old enough to get physicals. Trust me.
Yeah, I'm gonna go to back to this other doctor. When my doctor retired, he recommended this other doctor that coincidentally is my brother's doctor. And the doctor is really cool, but the practice is just a madhouse, man. It's like they make you wait for so long. The last time I was there, I had to wait for 2 hours. And then I'm like, well, why do I have to wait for so long? And they're like, well, we have a lot of walk-ins. And I'm like, well, why do I make an appointment? Why don't I just walk in then?
Yeah. Yeah.
And then they, how when you're at the doctor's office, they come out and they like announce the name for the next person to go in. It's like they kept coming out and like everyone they asked for like had left because they were so frustrated. But anyway, I'm going to go back to this other doctor and get that done. Yeah, I don't know. A lot of people don't like going to the doctor, but I think you got to kind of have to. All right, so if I'm looking at NVIDIA here, I don't know. I think if this thing goes lower, my next level would be down around here, 408. See, because we
Isn't
got
that where it was before the AI explosion? Or actually, this was
no.
down
That
here.
was yeah. I think was over here.
Okay, so we've still got a lot of AI to get out of the market.
Yeah. Um. So, but anyway, if it goes lower, I'd be looking for resistance. Sorry, support down around here because resistance here became support here. All right. So this is an important level. And then if this breaks, the next stop would be here. This is just an example of how in these markets there are certain price levels that just happen to be more important than others. Like look at this level here, right? 280. It was support, then it converted into resistance, then it was resistance again. So why is it 280 and not 282 or not, 278? And the answer is I don't know. I don't know why the market happens to like this particular level more than others, but that's just how it is. I mean, fortunately, as traders, like we don't really need to know why a level is important. I mean, we know that this is resistance here because it was support here, but we don't know why originally there was support that formed here. I mean, I don't know. I don't know why there's support here, but I know why there's resistance here, and it's because it was support here. And I know why there's resistance here, and it's because it was support here and resistance here. But the initial, I don't know what the right word is. The first time the level became important, we don't really know why that happened. Like why did the buyers just kind of come out of the woodwork here? And just decide to buy around this level. We don't know, but we know this is resistance because we have a lot of remorseful buyers from back here trying to sell to get out of break even. All right. Then we know that we got resistance over here because we got people that bought here that are trying to sell to get out of break even. It's not like the levels are like the map, right? So think about a map. Like, do you know why a road was built in a certain place? It's like, maybe you do, maybe you don't, but you know that the road is there, right? So you don't really need to know why this specific road is there. Up around here, a lot of the roads were based on the trails that the Native Americans used to go on. But anyway, I am digressing a little bit there. So that's what I would be looking at in NVIDIA. Now let's just go back and look at what's going on with tech. Yeah, so this is what I mean. Like, let's not get carried away here. So tech is making a decent move higher, but it still hasn't really gained back yesterday's losses. So right now we're trading here, but we're still below yesterday's opening price. So even though we're up, we're still in a downtrend. And this is what I kind of referred to before. So let's see, where are we? 169.50. So this is where we are now. So we're up off of yesterday's lows, but we're still lower than yesterday's opening price. So we're still in a downtrend. So, like I said, I don't think we should get too excited. The media is going to be running on and on about like, oh, the market's up because inflation is moderating, and now the Fed's not going to have to cut rate or raise rates anymore. Blah 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 blah. As traders, I think we really got to kind of not take the news with a grain of salt. Yeah, in the institutional world, people are not sitting around a conference or sitting around a table in a conference room now saying, "Oh, wow, look at that. CPI is a little bit less than we thought. Let's go out there and start buying stuff." These institutions generally they come up with these strategies and they don't alter them based on whatever the news du jour is, right? So your strategy could be your technical strategy or fundamental strategy, but it's a real kind of misconception, and I think that it's because of the way the media reports this stuff, but it's a misconception that like this news really moves the market. People are not, like I said, people are not sitting around a table saying, "Oh, this happened, so let's go do this." Now, when Moody's downgraded the banks the other day, that's something that would make people change their opinions or maybe make people act in a certain way. And that's because there's a concrete solid thing there. If Moody's downgrades the ratings, well, when these companies go out to borrow money, they're going to have to pay higher interest rates because they're considered more risky now. So that's going to take money right out of the bottom line.
I'm a history buff though, so I like to go back and look and see what happened on days that we have big giant changes in the market, so that I can see what. So just so that I have an idea, I like to find the story that made the actual move if I can. Kind of like a little investigation kind of thing. It's kind of hobby.
Yeah, the things that move the market are things that pertain to like anything that has to do with interest rates could could really move the market. So I mean, I guess I'm contradicting what I just kind of said there, but like interest rates will move the market. If you have a company that has like really good earnings or really bad earnings, that can move it. But the vast majority of time, we're just getting these psychological moves. Like why did we sell off of here? Now, if you were to put on whatever business channel or go listen to whatever guru you listen to, the guru du jour, gurus are a dime a dozen on Wall Street. Why did we have this sell off? Well, if you were to put on the media, they would be like, oh, the tech sector is selling off because of the debt ceiling, or fears that the debt ceiling won't be raised, or whatever was going on back here. But it's really, in my opinion, it's just a psychological move. We're moving. It's a technical move. We got up to a level that had been resistance, and we know that there tends to be resistance at former resistance levels because we got people who bought back here who want to sell to get out at break even. And we have anxious sellers. The market's moving higher, and you have these traders that are looking at it and saying, all right, well, the market's moving higher. I want to sell. Oh, look at that. The market's not moving higher anymore. You know, uh, that must mean that there are other sellers coming in. So these investors who want to sell start undercutting each other, and this causes the market to go lower. So we sell off of resistance. Is it because of fundamental news? I don't think so. I don't think a bunch of sellers are like, oh, we're worried about the debt ceiling, so let's go out there and sell. I think it's we get up here and it's like, oh, you got these people that want to sell at this level, and they notice the price isn't going up anymore, and they get worried that they're going to miss out because the buyers are going to go to whoever is willing to sell at the lowest price. So they start undercutting each other. And the opposite is true when we get to support. You get, why do we bounce off of support? Well, because you have buyers who are watching it trend lower. And why does the market trend lower? It trends lower because there's not enough demand or buy interest to absorb all of the supply. So the sellers are forced to offer their shares out at a discount in order to get buyers interested, and um, that causes a downtrend. When we stop moving lower, the people that want to buy say, "Oh, we're not moving lower anymore." That must mean that there are new buyers coming into the market. I don't want to miss out because the buyer or the sellers are going to go to whoever is willing to pay the highest price. So you get these buyers start cutting ahead of each other, and they start to outbid each other. So we get to resistance and we sell off because of psychology. It's because of anxious sellers. We get to support and we bounce because of psychology. It's because of anxious buyers. It's not because of whatever they're talking about in the news that day for the most part. Like these are technical moves. The vast majority of the time, a market makes a decent move or a tradable move, it's because of a technical thing, or it's a psychological thing or a technical thing. It's not because of what they're saying. I mean, institutions that, as far as I've known, and the ones I've worked at, like no one's really watching the news, sitting around saying, "Oh, this just happened, let's go buy," or "This just happened, let's go sell." Some of these fundamental analysts, they spend a long time coming up with, "Oh, I want to buy this company. I've done my research. It's got increasing margins. It's got increasing earnings. It just came out with a new product, blah, blah, blah. So I'm going to go buy it." So they put a lot of time into the research of whether they're going to invest in a company or not. So a little thing in the news isn't really going to change their opinion or change their strategy. Um, with AI, hackers can simply talk computers into misbehaving. Yeah, I guess my daughter's was using AI to write some of her papers, and they busted her, But
They allow it though. I mean, Mark. I mean, they've. My daughter just graduated from UF, and they were allowing it as long as you change it and it's not directly written like AI. I mean, so there goes your. I think it's the Gordon rule. You have to write 8,000 words. So I mean, I don't know. It's just all out the window now. You might as well just give them all a tablet and tell them to go party. Give them some weed. Have a
it's
good
just
day.
I think it's just the dumbing down of society. It's like yeah, I don't know. I think it's the dumbing down of society. It's like one of my favorite lines ever in any movie is in Caddyshack when Judge Small says, you know, the world needs ditch diggers too. It, you know, it used to be like you had to be smart to go to college. You know, now it's like, you know, you could be dumb as a stone, but if your parents can write the check or you can get the loan, there's some college somewhere that'll take you. So it's all of a sudden it's become like it's not a privilege to go to college. It's like your right to go to college.
But
You
that's
know?
the problem is that you've got these predatory lenders that are giving these kids these loans that are above what they need to go to college. They'll get a lunch loan, they get a party loan, they get extra money to do all this stuff. So they're out pissing that money away and not even considering it because they've got no guidance and nobody's saying, "Hey, what are you doing there?" I mean, I guess that goes back to your the foundation that you were grown up in, that you were born to, and how you were raised. But still, you have to learn how to manage your money. And if they're giving you money for free and you think it's for free, you don't have to pay it for 5 or 10 years. By the time you do start paying it, you never get out of it unless you're smart.
That's why I have an issue with this whole student loan forgiveness. It's like, listen, your college is where you're supposed to learn. So if you sign a contract with someone and you're supposedly an educated person, well, you should understand the ramifications of the contract. And you know, I just think it's so like I remember I was watching, I don't know, some protests one where, and some girls like, you know, I had a master's degree in finance and I can't find a job. It's like, so you had a master's degree in finance and now you don't understand how the loan process works. Um, you know, and I think the problem is that, you know, these, if you want to get a job, get a major in something that's like people need, like become like my daughter's going to be a nurse, or if you become an accountant, you'll never have to worry
Oh my God. You become
about
an
you know
accountant. That's gold.
how do they learn if AI writes all the papers? Well, I don't know. Maybe they use AI to figure it out. I'm so sick of artificial intelligence, man. And you know, it's um just looking at Tesla right here. I'd be looking at this 242 level. We're up a little bit this morning, but again, we're still in a downtrend. Where we are now is lower than yesterday's opening price. But if we get below that, I think our next stop is probably down around here.
Oh, that's nice.
You know, it's like, listen, man, if you go get a degree in transgender studies and you can't find a job, why do I have to pay off your student loan? You
Boom.
know,
Thank you
I
very
mean, if you
much.
want to, you know, if you want to not have to worry about your loans, get a degree in something that really counts. Like my niece, her partner, um, her degree is contemporary dance. Like like I don't even know what contemporary dance is, you know? So it's like so she now works for DoorDash and she can't afford to pay her loans off. Well,
Sure.
you know, maybe you should have gotten a degree in something people care about instead of contemporary dance, you know?
And you know what? There's some time during that contemporary dance education that she's like, you know what? This is going to be worthless.
Yeah. Yeah. I mean, maybe if you got a degree in ballet, you could get a job working for like some ballet group or whatever they call them. But I mean, I would never pay for my kid to go to school to get some useless major like that. Now, my daughters, one of them wants to become a nurse and the other one wants to become a vet. Well, those are pretty, you know, those are in demand things. And vets make like some of the wealthiest people I know are vets and dentists. Vets are like you're a doctor, but you don't have to pay the insurance. You know, it's not like being a like if you're a doctor to people, you got these huge insurance costs you have to pay. But if you're a vet, you don't have to worry about it because it's unfortunate. But if you accidentally make a mistake and you kill a dog, well, you know, what's the court going to say? How much is the dog worth?
Now,
Right?
there's where you get replacement costs. So, like, right, if you've got this a big amount, you know, where we were talking about depreciation and replacement cost, the dog should be replaced for $1,500 or whatever you pay for the dog if you lose the dog.
Yeah, exactly. You know, exactly. So anyway, all right, everyone, I'm gonna get going because I don't feel so hot, and I do need to cut the grass before it starts raining.
You guys
Um,
have a wonderful day. Do
yeah,
something
all right,
good for
everyone, make sure
somebody,
you come back tomorrow, and I will see you tomorrow morning.
and you will be notified tomorrow morning.